Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 16th of July, 2007. The market closed. S&P did manage to get a small gain, 4 cents a share today, closing up at 154.88, or make that 3 cents. But nevertheless, it still was a gain, as it continues to hold on to these gains after breaking out last week. So once again, though, we saw diminishing volume. And once again, I'll point out that only price pays, and that's interesting to note. The volume, as we saw in here, that this rally came on diminishing volume. Now this volume is lacking once again as we have price strength. So overall, that's just telling us to be a little bit cautious here. We are still in an uptrend. We've got a rising 50-day moving average. That's what's most important here, and that price moves higher is what's most important. I'm still considering that the potential for the upside of 158 based on the inverted head and shoulders pattern that I pointed out numerous times last week. But short term, when we look at the 10-minute time frame, you can see we are getting a little bit of distribution here, and I call it that because we have these two moving averages crisscrossing in the short term. However, I do expect that the 153.35 level will contain any pullbacks from here. So for aggressive traders, if you think it's going to get down there, then there might be a good short sale opportunity. I wouldn't suggest it, though, with a rising 5-day moving average in that location, as well as the prior resistance level at that area. So it seems as though, as I stated on Thursday and Friday of last week, the market's extended. Now it just needs to consolidate. Whether that consolidation comes price-wise or through time is anyone's guess. We'll see, but the best support looks to be 153.35 or so. And another number I had pointed out on Friday was 154.20. So let's keep an eye on that area as well. The 154.20 is what was that number? I don't know. Anyways, let's just keep an eye on 154.22. I had a reason for it, and I have it in my notes. But the market continues to hold up. Probably bringing in short sellers here. Is this the pause before continuation of the rally that leads up to 158, or is the market going to start to sell off on earnings? We are in earnings season, so it's very important to be aware of when stocks are due to report earnings. And taking bets in front of earnings is just that. Taking bets. I've got a lot of requests. What do I think of Google? What do I think of this company or that company? Generally, I like to avoid companies that are reporting earnings. Once in a while, I do look at some plays where I think I can define risk, and I might outline one of those that I did take a small call position in today, in a later video today. But anyways, let's take a look at the IWM next. IWM, I said, hadn't officially broken out because it hadn't taken out that high, but the shorter term time frames looked like it was acting like higher highs and higher lows. Well, the IWM now seems to have failed to break out in this point, so we're going to have to continue to keep an eye on $82.80. Down below, breaking below that level could represent a bigger problem for the rest of the market, as this is the market that has led the overall indices higher over the past several years. So the Russell 2000 is showing a little bit of profit taking in here and not really breaking out. It broke down through this first little level of support. Now it's trying to hold on to that 5-day moving average. So the IWM is, I think, giving us reason for concern. I had said that 84.50 was a potential support area. I'd say it's close enough to that level right now to consider it still okay. But breaking really below this gap, probably below 84.05, could lead to a breakdown back towards the bottom end of this range once again. So the IWM Russell 2000's given us a little bit of reason for concern, something we're going to have to keep a closer eye on. And if that starts breaking down hard, well, then we're going to have to get a lot more defensive on this market overall. The semiconductors, though, they did add 7 cents, basically getting back what they lost on Friday. And this market continues to hold up very well. The short-term extended nature continues to play out in here. Could be that this market is going to settle in near the $40 level for options expiration on Friday. But we've got back and forth choppy action right now. I'd say what I said, 39.50 was probably the level of support. I'd say it's probably about 39.60 or so. That's about where we had this prior high, as well as we've got a rising 5-day moving average. So we are going to give the benefit of the doubt to the buyers, but it is options expiration week, so we might not have that much actually occur in the semiconductors. They are getting extended in here a little bit. You could see that if you took a move from 33 up to 38, let's just call it, that's a 5-point rally, and then take this low here from 35 and a half, that would measure up towards about 40 and a half. So this leg is equal to that leg, and that's what's known as the measured move. So it could be that we're due for a little bit more consolidation in here. This market has had a great rally, and still there's no evidence that it's about to reverse or anything like that. I just want to point out this measured move has reached its target, so it may be due for more of a consolidation in here. The Nasdaq 100 did lose 5 cents today, or 0.1%, up at 49.85, and this market is again has been the most consistent here over the last couple of weeks as far as the gains. We saw the breakout past this $48 level, this pull back to the rising 10-day moving average, and more rallies from there. But today we had our first down day in the last 4 sessions. It was only down a nickel, and again, this market had gotten extended. Now it looks like we have our first signs of distribution in the short term. It doesn't automatically mean the market will enter decline, but it means that it does probably need to consolidate in here at least through time. Let's look at the support levels. I think that this level right in here, about 49.55, which was basically Friday's lows, right around in there. That's going to be important, as well as the location of that 5-day moving average. It might rise up to that 49.55 and meet the market there, and then we'll get more of a correction through time. But overall, the Nasdaq 100 continues to be very strong looking here, showing no evidence of any topping. So if you're looking for it, it's just not there yet.